Well, hello, folks. Welcome back. This is the midweek review for the ICT Mentorship for April 28th, 2021. As a quick announcement, because your attention is at the highest at the moment when you first turn these videos on, I promise I'll be brief. For the new members, and because you're all mixed into different user groups, there isn't just a new user for 2021 group to talk to. So they're all intermingled into these forum user groups. The month 4 content should be visible to everyone, and that doesn't mean that your links are going to open. It just means that you can see the links. If you've made your payment for month 4, and you can find those payment instructions in the month 3 content, bottom of the page, that needs to be processed, and then your original username, which is the same username you use in your forum login, and the original password that was given to you at enrollment, that will be used to open up month 4 content and going forward. On May 10th, month 1, 2, and 3 will open up your core content with your original username and password. And at that moment, everyone will be back in sync with using their original username and password, and any temporary username and password that was sent to you while we've been doing this migration to the new server will have been made redundant. We won't need it. So you'll have just the original username and password to work with going forward. And I appreciate everyone's patience in regards to all that. All right. There is a ton of lessons I've been working on, and I want to kind of keep this one short today. The charter members, if you haven't already noticed, the price action model number 1 algorithmic theory video was posted on the model number 1's forum post, so you can find that there. The next one will be on, let's see, what's today? Next charter upload will be on May 30th. Okay, the last Sunday of each month. That's my planned scheduled release for each new charter membership algorithmic theory video. All right, so with that, let's get into it. Today we had FOMC at 2 o'clock, and then we had the Fed rate announcement later on after that. So we were waiting on that this week, and I mentioned in the PDF file daily log entry yesterday that we were seeing consolidation ahead of today's FOMC. So what we have is price delivering into the buy side and balance, sell side inefficiency. As I mentioned, we would likely see it trade down into. I would like to see it trade a little bit more on the downside today, but it's left some room for it to go into consequent encroachment overnight and into Thursday and Friday, maybe closing it entirely here. We do have a volume imbalance between this candle's closed, this candle's open. So don't just think that it needs to come down to here that closes this buy side and balance, sell side inefficiency. We have this volume imbalance in here that can dig into. Also, I'm of the opinion still that this could drive lower and attack this low, and therefore make an attempt to get down to that low as well. So right now the mantra has been lower dollar, higher foreign currency, and we've been seeing that come in like gangbusters. So we have the bearish order block here. It trades up into the opening of that candle there. We'll look at it when we drop in the lower time frame, all on the heels of this fair value gap that accumulated new shorts after bumping into this. As I mentioned, before we traded down into here, I said we would go into here and then likely bounce up into this breaker, which it did here, and then offer trading into this buy side and balance, sell side inefficiency. I got a lot of questions as we traded into today, and I didn't get a chance to go into opening them, but most of the topics that were passing over my cell phone, because every time I get an email, it flashes, and I look for something that would need immediate response. And please don't take that and abuse it and say, well, now I know I'm going to get ICT's attention because if I say I can't get in my account, because I've had people put fake titles in their email and say, I was just doing that to get your attention. And that to me is disrespectful, because you're not any better than anyone else in the mentorship. So I only go after high urgencies if I can, but I'm not sitting by the email. Usually my staff will push things that they can't answer themselves, and they'll push it to me in another email address that I'm not making public, because I need to have an email address that is user friendly. I get way too many emails at innercircletrader@gmail.com. It's just too many. It's too many. So I have to have them filtered by my staff, and it gets pushed to me if they can't answer it. Well, the question I was seeing flash today was, how did I know to forecast this move under here, then come back up in, and then run into that? Well, namely, it's just order flow. It's just the likelihood that it's been trading lower, the liquidity below here, and then this sell side liquidity pool, and then this buy side imbalance, sell side inefficiency. You could simply say that we're forecasting, or I'm forecasting, future premium arrays in the context of a bearish market. So if we were going to break below here, classic support and resistance will say, well, we bounced here, so when we trade back down into it, it should offer support again. Well, it didn't. And then you have this area here where it comes back up in. That is a classic support broken turn resistance, and I'll grant you that. But that's not always the case. I was giving you the logic as to why it should do this, because there's unfinished business down here. Okay, so if it wasn't so obvious like this, then maybe this would have acted as support, or maybe it would have just went below a little bit and then rallied higher. But because we have a narrative that's underway, market maker sell model, everything in this perception, opinion, sentiment, underlying narrative, okay, the underpinnings of the market is that of it's driving lower to get into this area to rebalance. Does it need to completely close it in? No, it never needs to do that. But I think in this case it is likely to do so. And every premium array where we have the small sell side imbalance, buy side inefficiency in the form of a fair value gap, here trades up to consequent encroachment, leaves it open a little bit. We'd like to see that. It left a small portion of it open, then it runs lower. Then it comes back up, closes in this. All this downside is closed with the redelivery back to the bearish order block, trades to it here, and then presses down into that buy side imbalance. So it's a matter of just, number one, experience, two, knowing what I'm looking for and the things that I'm teaching you, and putting them in the proper place and the proper time, and using the economic calendar. So all these things come together to create this perfect little tapestry that tells you a story. Now, our story isn't always told after it's happened. We talk about what's going to happen before it happens, and then we savor the opportunity to look back and say it delivered like we were expecting. And that is very encouraging, and it aids in your development as a student, because you see the things I'm pointing at, you see that they're unfolding as I'm explaining them, and it's hard to beat this type of consistency. So try not to worry about whether or not you can do what I'm doing and giving you my experience in the commentaries, because that's a gradual thing. You're not going to jump into that knowing it simply because you became a charter member, okay, or that you have all the charter member models read and studied, and you think you know them, but you don't. And those things will give you this false sense of security, and you'll believe you're better than you really are, and you'll do things a little premature or overzealously. Okay, you won't be thinking clearly, because you'll think, well, I got this licked. Even if I say something in commentary and I think that the market's going to do this or that, you can be fooled into thinking you're much more refined as a trader than you really are. So this is that balancing act I have to have as a mentor, because I want to keep you moving in a progressive pace, but not allow you to get so far ahead of yourself that you get prideful. And when you feel that way and you have failure, it sets you back a lot, especially the young men. And to avoid all that, just listen to me, okay? Try not to do more than you're expected to do, and don't think too highly of yourself. Okay, so it's a balancing act, not only for me as the mentor, but you as a student. Try to keep yourself in check. But with that said, let's drop down to the hourly chart. All right, here's the hourly chart on the dollar index. You can see a real nice return back into that order block here. Trades up into it here, breaks down, optimal trade entry, breaks lower. Beautiful sell side imbalance, buy side inefficiency, bearish order block. Now this alone, folks, folks, if you're in a new group that just started in 2021, this is where you want to write down and print your charts out in your own platform, not what I'm using here. But in your own chart, annotate this area here, and this whole idea right there, and this buy side unbalanced, sell side inefficiency that we were looking for it to trade down into, because that's what this level is here. That's that old buy side unbalanced, sell side inefficiency on the daily chart, the premium high of that. If we have market trade lower, come back up in optimal trade entry, and then break lower, you don't need to trade that entry right there. You don't need to have that. Now you want that, and you want this one here, but there's nothing wrong with trading that. This is your high probability advanced confirmation that I trust it now that it's proven itself to me entry. Okay, and there's nothing wrong with that. It just means that if you are not as astute or developed as a student of mine, you might think that this is likely to occur and create a short-term high here that you could sell if you had the courage to do so and skill, or see that as an optimal trade entry. Okay, that's fine if you can't take that trade. And if it breaks, that's what you want. You want to see that little displacement right in there. That's all you need. Because as soon as you see that, okay, wait for this thing to start turning back up. As soon as you get this swing low in here, swing low is the low, higher low to the left, higher low to the right. Once you have that, then you're going to wait for the price to drive right back up into this little area right there and to the bearish order block. Because what you're doing is now you're getting the signatures that really line up with a run into this area down here below that line. So you're going back up into rebounds that bearish order block. So the algorithm is going back to a premium array, and it's also optimal trade entry. It's above 50% of what? This high to that low. 50% is roughly there. It trades up in, completely closes in the imbalance there, hits the order block, and between this high, this low, and this high here, that's optimal trade entry for your Fibonacci. Perfect delivery there, and strong displacement on the downside. Attacking, what's this? Obviously it's sell side liquidity pool, but what is this signature here? That is a low resistance liquidity run signature, because the low here is higher than the lower low there. If this was reversed and we had a low and a lower low there, it might, well, for instance, like that. So you have a low, a lower low. That is not high probability for a low resistance liquidity run. This is a higher resistance liquidity run, but nonetheless, it can still be traded through. I mean, obviously you see it here, but we prefer to see this signature here. So look at all the factors here. We came back up into a daily bearish order block off of all this backside story over here. So all behind this sell-off here, we had all these other factors on the daily chart. Fair value gaps, bearish order blocks, all that. We hit the order block here. Does it displace to the downside? Yes. We have an imbalance. Beautiful. Now here's the part where I said have your pen and pad ready. This right here, that is a complete model. Well, you've already talked about this, Michael. I mean, you've talked about that on YouTube. Right. But think about everything that's being factored in on the daily chart back here. Everything is showing that this is going lower. To get into that daily buy side unbalanced, sell side inefficiency, that's the discount low of it, the premium high of it. So if you see this and it trades right back up in here, folks, this is an easy trade. Like, these things form every single week. Now, I don't want you thinking that you need to be in every single possible sell. That's not what I'm trying to convey here in the mentorship. Your first goal is to find your one model that finds a setup once a week. Once you get it, you take it, you log it, and you wait, and you take the next trade the next week, because you're trying to build discipline. You're not trying to, as I answered an email before I started doing this video tonight, trying to trade with live funds, and you're in month 3, and then sending me an email saying, how can I overcome the psychological effects of losing, even though I didn't take that much of a loss this week? And to writer of that email, don't take offense because no one else knows who you are, but you know who I'm talking about. And I replied with basically, you're doing the very thing I said not to do. That means trading with live funds. You don't know what you're doing. So is it any surprise that you're experiencing the very thing I told you that you would experience if you try to trade with live funds and not know what you're doing? It shouldn't be. So you're not going to get the results, and none of you are going to get the results that you want to have if you don't listen to me. To me, it's ridiculous for you to expect to learn from me, and then you're going to cherry pick what you want to listen to and not listen to. When I'm telling you the things that are going to get you where I'm at in my understanding and my ability, and you will find your own model without the pain. Now, it won't be easy, but you won't have the pain that would otherwise be associated with it if you'd listen to me. Don't trade live funds. You're building toxic, negative feelings about executing or holding the trade. That's what you're learning, and that's a bad habit to work out of. If you just trust me and go through the boring, not making any money, but knowing how to read price, that is exactly what you're here for. And if you don't like that, then don't continue. But don't be upset, and please don't send me emails saying, I'm trading with live funds. I'm not even a charter member, and I'm having a hard time. Congratulations. You've now proven what I said beforehand was going to happen, but you aren't listening still. Okay, so it's very frustrating for me when individuals come in here and they do that very thing. Now, I know I talk a lot, and I know I say a lot of things that may not feel like it's pertinent to you, but it is pertinent to all of you. You should not be trading with live funds while you're going through mentorship, period. At the earliest, 6 months after being a charter member, that's the earliest. That's the earliest live funds should ever be considered. Now, most of you aren't going to be willing to submit to that. And most of you aren't going to have the results that you would have had, could have had, and should have had you listened. I'll get off my soapbox. But this is a complete model for anyone that is looking for something that consistently repeats, using that daily time frame, looking for the weekly bias, because that's what the mentorship is primarily focused on, the expansion of that weekly range. Now, I could have made this mentorship much more involved, much more complicated than it is. But to strip it down to its barest core, central tenets, we're looking for a direction on a weekly range, higher or lower, and we are not trying to predict that weekly close. We just want to see what's it likely to pop higher or pop lower into a logical level, and does that offer us an opportunity to find setups? Is it something that will offer 35, 40, 50 pips, as much as 75 pips? That's what I'm hunting each week. While this isn't 75 pips, this is I don't have to work the rest of my life setup. Now, you're not going to have that with a $100 account, granted. But over time, doing this very well, you can get a hold of money. That's the easy part. But being able to be worthy of receiving money to trade with is something altogether different. So if you can just trust me and follow the process that I'm laying out in front of you, these types of setups will literally fall into your lap. Like all of this in here, everything back in here, these are things that we discussed beforehand. It's not like, we're going to talk about the chart after it's already happened and look how smart we are. You're all paying me or have already paid me. So I'm not trying to, scam you. I'm not trying to convince you of something, after the fact and hope you just believe me. These are the things I teach you. These are levels that I call out beforehand. I tell you where it's going to go, and it's going there. I'm doing everything I can except for go in front of a chart with you live and say, go in here and go short right there. And I'm never going to do that, because that's the part where you have to fall into your own specific comfort level and model. A lot of you don't want to trade these imbalances. You want just a standard optimal trade entry with an order block. And you won't look at this as a trade because you're thinking, because the question usually comes to me like this: how do you know it's going to stop there and not keep going higher? For instance, why is this high being higher than this one and it starts to trade back up? How do you know that's not a low resistance liquidity run to go higher? And that's a pretty good question if you're a new student, but not so much a good question if you're a charter member. I'm not saying that a charter member said that to me or asked me that. I'm just putting in context that a new member asked that question. And yes, that's a reasonable question for a student of that caliber to ask. But a charter member, hopefully, would never ask why this right here, as it's turning up, why wouldn't it run above here and create a stop run here, go higher like all the guys on YouTube think it is? Like this is a stop run and then reverse. No. Because the underlying narrative is all back here on that daily chart. The fair value gaps, then hitting the bearish order block here. I just don't have the line extended all the way over there. But it hits it, and then it breaks down. So what is it reaching for? Where we have been looking at on the daily chart. Down in here. This is that buy side imbalance, sell side inefficiency on the daily chart. So we want to see price get back down into that and rebalance it. So if it's up here after it's broke down and it's covered all this downside movement right back up here, when this candle was a bullish green candle, right at the high of that candle, it was all bold-faced green. At that moment, it looks terribly bullish to a novice trader or a retail-minded trader. They're thinking, man, this is going to keep going higher. And then you have this. So there's things that you're going to encounter in your development that's going to feel extremely uncomfortable. And the first thing that is going to most likely feel most uncomfortable is when the candle's most bullish. That's in the proper context like we have here. That is the optimal time to sell short. That is the highest degree of the right time to sell short there ever is in trading. When the candle's most bullish, that's the best time to sell short. But you just can't go in there and sell short at every extreme bullish candle. There has to be some kind of narrative at work. And the daily chart is driving all of that. All of this movement here is derived from what I've been showing you on the daily chart and talking about in the midweek and weekend commentaries. This level down here wasn't just brought up today. The idea of it trading down there wasn't brought up just for today's video. Look at the reaction on this level right there. Bang, hits it and it bounces up. And it goes what? Right up to the bearish order block. So it hits the premium high of the buy side imbalance, sell side inefficiency on the daily chart, which is what this is. It hits it perfectly, rallies to what? To the bearish order block on the daily chart, and then it trades lower. No support and resistance ideas in here to cause that turn. It's just this line here, which I'll now extend out. And there you go. Look at the bodies respecting it. Yes, we have that little wick there, but look at the bodies telling you the story. Order block, daily chart, boom. Rebalance here, there, down. If you had a broken bone as a child, and I broke a few of them and being in martial arts and doing things I shouldn't have done as a kid. But if you ever have a broken bone and you see an x-ray, this is kind of like a fracture. Okay, all of this movement lower from here to here, all that movement lower, just think of that as one bone, okay, in your body. And say you have a hairline fracture. That to me is a real good analogy of what this is here. It's a small little fracture in the overall move that needs to have the bone rebuilt in that area. So it goes too fast lower there, and it runs right back up and covers it back up with new bone, so it makes it strong again, and then it can resume to go lower. Okay, all you're doing essentially for the easiest low-hanging fruit trades is you want to know, where's it going? Where's this thing trying to get to? If it's unclear to you, and like it is sometimes for me, I'll say, I don't know. And I usually get emails from new students. They're like, I find it hard to believe you don't know. You're just holding back. No, there's honestly times where I don't know what it wants to do. And as a human, as a real person, I don't want to gamble. I want to obviously tell you what I think is the highest probable direction or target or where markets will likely trade to, because that's the underlying framework where I lend my experience to you. So that way you hopefully are operating only in that while you're learning. Now, once you become a charter member and you've gone through all the price action models and you've done 6 months of back testing on whatever model you want to work with, you should not be relying solely on what I'm calling out in commentary. That's not something that you should only think of. But if you're not a charter member, you should absolutely be operating in the underlying tone or sentiment that I'm sharing with you in these videos. So if I'm wasting any of my time doing anything else, I'm doing a disservice to you. But if I'm outlining why it should trade to a specific direction, to a specific location on a chart, that is for your benefit. I already know it's likely to do so. I don't need to talk about it. I'll just engage and do what I need to do in trading. But you as a student under me, to do things outside of that, to fade it or trade other markets, because there's a lot of you that are month 3 going to month 4, you're looking at pairs in markets like gold keeps coming up. I'm not touching gold. I'm not interested in gold. You're going to find everything you need in British pound, euro dollar, coupled with the analysis in the dollar. That's how you learn how to trade. But if you are dabbling in other things and you're not using the framework that I'm literally giving to you on a silver platter, you are wasting your time and your money here. You're not going to get this experience next year with me. Okay? I'm not going to be laying it out for you before it happens. We're going to be doing reviews and light teachings here and there, and just basically I'll touch on topics to reinforce things you've already learned. But I'm not going to be doing this in perpetuity, so you are not doing yourself the most benefit, I guess the word I'm looking for, is really just to focus on the things I'm showing you and operate in that context. Because what the derivative of that is, and the end result comes that you now have experience, you find a way to trust these things happening, and when they pan out, it feels good, it's rewarding. And even though you may not have known why it was going to do that until I told you, you get the satisfaction of practicing with that right side of the marketplace. Now, some of you might think, well, you talk about how you don't want to do trades for us or point to trades because it'll create codependency, and you don't want us to have that because if I ever stop, then you feel like you're lost. Are you going to have that same feeling when I stop doing these? Here's what's going to happen. This is where it's going to draw to next year. For some of you, it probably feel like that initially, but for everyone that's done the work with practicing and engaging with back testing or live forward testing with the market trading live, in that context that I outlined in the week and midweek reviews, if you work with that, you won't need me to tell you what it's likely to trade to, like what direction it's going to go in and what it's likely to reach for. You'll know that on your own. That is a byproduct of going through 12 months in charter level. You have a good feeling for that. Doesn't mean you're going to be right all the time, and I'm not right all the time, but you'll be more than enough correct on the side of the marketplace and where it's likely to go, that your confidence will not require me to give you that, okay, that little nudge. Okay, if ICT's looking at it that same way I'm looking at, you don't want that to be a goal for your development. You want it to be, I'm going to look for what I'm wanting to find when I'm a charter level, and then I'll check and see what ICT's said in his commentary. That's how you check yourself, and you'll graduate that way. You don't want to rely on me. You don't want to rely on anybody else. Go on your own steam. That's what you're learning here. But this model here, folks, that's like the easy stuff. If I was doing a $150 course, if I want to do like a $150 course and have everybody learn how to trade in 1 week, Okay, one simple thing. I would literally teach what I taught on YouTube. That's it, because it works. And that's how you use the optimal trade entry here with the right context. It's trading lower. Look for every time it creates these little imbalances on the downside. That's that little hairline fracture. It's going to come right back up, lay a new bone over top of that, and then it can go lower, like it did here. Small little hairline fracture. Okay, wait for it to come back. New bones laid over top of that. It's stronger now. Now it can resume going lower. Same thing here. Hairline fracture. Come right back up, rebalance, lay new bone over that, and then we can go lower. Over here, same thing. Hairline fracture is a little bit bigger than this one over here, but it's the same thing. This high to that low to this high is the same thing, just bigger than what we see here. It drops down, comes right back up, and then goes lower. It just takes more candles to get up to that area here that rebalances, and then it trades lower. And then it creates another little imbalance that has to be rebalanced. So what your mind should be internalizing when it does this, it's not that, and this is what drives me crazy when I watch people on YouTube. Everything's the mitigation. If you literally are a drinker and you watch anybody that teaches my stuff on YouTube, get yourself a bottle of alcohol, okay, if you're a drinker, okay, and this is a drinking game for you. Get a shot glass and fill it up, and every time you hear mitigate or mitigation, take a shot. And I guarantee you, you're drunk before the video's over. It drives me nuts, but the market's not coming up here to mitigate, and it's coming back up here to mitigate, and it's coming up here to mitigate, and it's coming up here to mitigate. They took one word they learned from me, and they try to apply it everywhere, like wallpaper. They just want to put everything is one term all the time. And it's irks me to death when I hear that, because they don't know what they're talking about. What I want you to think about is this market, when it's bearish and it creates this areas like this, what's actually occurring is the market is not giving the marketplace enough time or ample time in this range where buying can occur. That's exactly what the algorithm is doing. There is no market maker person buying price up to get to that level. There is no market maker buying that fills this area here when it goes up. There's no market maker buying from here to go up to there. There's no market maker buying from here to go up to there. That's not what's going on, folks. It's not buying it up to mitigate. That supposes that the market's being pushed up by buying pressure or driven down by selling pressure. That's not what is occurring. It is absolutely not. I don't care whose brother works at somebody's bank down the street. Okay, I don't care how many ex-market maker people you hear on YouTube. They're all liars. They're all frauds, and they are not who I'm referring to. A market maker commonly is mislabeled as a dealer. Okay, what I'm saying is people that call themselves market makers, they're just dealers. They're just dealing. What I'm talking about is, where does the price of the dollar itself come from? Is the dealer at these lower level, even though they're upper tier banks, are they making the market for dollar? No. They operate on the price feed that comes right out of the Federal Reserve. So, who's the real market maker? The central bank. So, if the central bank is operating with a bearish stance on the currency and they keep repricing it lower, and they do it quickly here, chances are their algorithm is going to allow for price to go right back up to that again. But the timing aspect is variable. You don't know if it's going to be this imbalance that gets replaced and rebalanced up to here with movement on the upside. This is offering buying. Or if it's going to go down like this and then come back up at a quicker, more timely manner. Notice how when we had this imbalance here, where it traded down with a big candle, the very next candle here, now this is 1 hour chart, so each candle is 1 hour. So we have 1, 2, 3. On the fourth candle, or 1 hour later, it rebalances this. Whereas over here, it creates the imbalance, and it's 1, 2, 3, 4, 5, 6, 7 hours later, it rebalances. And then obviously I'm not going to count all the candles to get back to this one, and I'm not going to do it here. But that's a variable, okay? There are things I know about that with time, but that also goes into the area of things that I'm not allowed to teach. But now, right away, some of you are getting bent out of shape because I'm being honest. But I want you to settle yourself down, okay? Listen to what I'm saying now, okay? You're all keyed up. You just said you're not going to teach that. That's not fair. No, I'm not going to teach everything because I'm not allowed to. But do you need to know what candle, relative to the time aspect, it gets back up to there, when you already know that this is the area it's going to return back to? You don't need to know that. You don't need to know which candle it's going to be until we get back up here. You don't need to know that. You don't need to know when it's going to come back up into that one. You don't need to know what candle it's going to be when it gets up there. As long as it gets there, that's all that matters to you. If it happens during a time of day in a kill zone, that's all you're looking for. I'm putting you in front of the charts at the time that the algorithm is going to go back to it. I'm not allowed to teach you the candle that goes right to it. Okay, and for the mature folks in here, you're going to have to just accept that as it is, and the ones that aren't willing to accept it, send me hate mail. It'll just get ignored. The bottom line is, you don't need to know every facet to the algorithm. I don't know everything they're doing with it now, but the things that are static, that aren't going to change, that tell you not to worry about, you're always going to see these little signatures here. Okay, you're always going to see that. And if you can find that in the chart, that is the things that you go after. That's your always going to find trades, always going to be able to find market moves, always going to be able to participate, always going to be able to engage. And that is the ability to not have to have a job. And that's what you want. You want to be able to be your own bank, be your own boss, be your own employer. Okay, that's financial freedom. It doesn't always equate to rich and wealthy, but I would argue that if you make your own money and you just replace what you are comfortably earning right now, maybe not so comfortably, okay, because everybody wants more, but if you were able to make what you make right now, but didn't have to do anything except for do a couple trades a month, wouldn't that feel like you're rich? Think about it. Wouldn't you feel rich if you didn't have to leave your home to go to work? Well, maybe some of you are working home, but maybe you didn't have to do something for someone else and they pay you a little bit of money per month or per week or per hour, whatever it is that your pay scale is. To me, I define that as rich. It's not wealthy, but that's rich because you're getting paid by your own actions and your own schedule. Like you can say, I'm not going to trade today or this week or this month or whatever. And it's okay because you know these setups are going to form. You know that you're not going to find a absence or void of these types of setups. They're always going to be there. They're always going to be there. These setups occur more consistently than you realize. But you won't realize it until you go back through all the commentaries, listen to what I'm saying about the narrative, where it's going to go to, and then break that down by day and the calendar and the kill zones. And you'll see how often they form. And since this is an hourly chart, this is a real good context for 50 to 75 pips. Not all of them are going to deliver that, but one of them will frame it. What if you were short from up here or here and you wanted to trade down into this imbalance? 10, 20, 30, 40, 50, 60, 70. Right there. So you have to change a little bit of your focus, if you will, on what it is you're trying to do. And that way, you'll get in line with what the market's trying to give you. Work within that context alone. Don't try to impose your will. And don't force the setups. I mean, your eye's being trained to go to these. Once you see it, consistently happening over and over again, but you have your chart annotated where it's going to. So when this formed here, you know it's real likely that it's going to go down there. When this formed here and you had this level down here, look where it traded to. Boom, hit the top of that. Daily buy side imbalance, sell side inefficiency. That's your real support and resistance. There's nothing else down there, but look how beautiful it was. Turned, bearish order block, narrative resumes, look for a fracture, boop, covers it up, and then lower. So once you go through a few months of it, really aggressively focusing on the things I'm pointing out in the chart, the direction I'm pointing in, and you really do the work of studying it and looking at all the time frames I cover, you won't doubt what you're doing here. You won't doubt what you're learning, and you won't doubt that you will find success. Just that success is going to come on its own timing, and nothing you're going to do is going to force it any sooner. And I can't make it happen any sooner. So you have to be a realist in that regard, because that's what makes you consistently profitable. Being comfortable with the uncertainty of not knowing when that new setup is going to form, but when it forms, you know what to wait for and where it's likely to form. That is time of day, day of week with the calendar. I mean, think about it. It's just like watching the TV programs. They're all slated to come on a specific channel at a specific time, and seasonality that takes place. You know, certain Christmas programs are going to come on in the later part of the year. Do they play Christmas stuff in the summer? Not where I'm from. But, you know, like I've watched over the years growing up, they play Jaws every single year right around the beginning of summertime. Okay? So when everybody's getting ready to go to the beach, I know that Jaws is going to come on. And if you know it's likely to come on, that means you're preparing yourself. Just like in a trade, you know that there's going to be a setup. Seasonality kicks in. Seasonal tendency is going to be in force. So wait for a specific criteria. What's the criteria? Well, the price action needs to do something. Okay? And knowing that with seasonal tendencies, knowing it with the price delivery, that it's framing, going higher just to go lower, going higher just to go lower, going higher just to go lower, and coupling that with day of week and time of day, within that overall narrative, you have a complete, comprehensive understanding of price action that you can't get anywhere else. You can't find that in books, can't find that in other educators, unless, you know, obviously they're parroting what I've said. You're not going to find a more complete, here's how you go into the marketplace, than what you're learning right now, right here. But until you strip it down and take a look at it like this, because I guarantee you the new group hasn't looked at it like this. They're just looking at, I wonder what video he's going to talk about next, or I can't wait to get into next month's videos because he's going to teach me some new magic trick. When you're getting magic every single week, like we're fortune telling every single week, and it's fun. It's like a treasure hunt every single week. And if you just find one setup that you grow real accustomed to, that's all you need. There's more obviously in here. I wanted to talk a little bit just with this pattern here, because that's one that your eye should be trained already. Even if you're month 3, you should be able to see these here and how price goes right back into them. And if it's a market that's bearish, this is a sell signal, this is a sell signal, this is a sell signal, this is a sell signal. It's not a timing for entry, it's a selection tool for bias. But what happens if you have a buy side imbalance, sell side inefficiency, when the market's directional bias is bearish? Then that buy side imbalance, sell side inefficiency is a scalp. You have a lower expectation of what it's likely to go to higher, or how fast it'll move going higher, because it's against the underlying institutional order flow that's bearish here. So if it's bearish and we have imbalances that fill to the downside, like right in here, you have this right here. Buy side imbalance saw an inefficiency. The market trades down to it. Is it in a hurry to go higher? Not yet. And comes back down to it again here, and then it goes a little bit higher. And then it creates a breakdown, comes back up in here. This is one where if you were looking at it like selling short here, selling short here, this is a time of day where, yes, you would have been trading if it was kill zone specific. But now let's take a peek behind the curtain, if you will, because if you don't pay attention to what I'm about to say, it's going to sound like, oh, you're just making a perfect excuse after it's happened, and there it is. You know, you're frauding us. Okay, listen. Yesterday was the 27th. Today's the 28th. When was FOMC? Today, on the 28th. What's it likely to do the day before FOMC? Tread water, mark time, chop wood, go sideways. In other words, consolidation. And that's what we had here. So, would you expect the market to trade up into this here and sell off ahead of FOMC? No. Can it do it? Sure, I've seen it happen before. But is the probability likely to see that happen? No, it is not. So is this a trade that you would take short here based on that understanding what the economic calendar and what the algorithm is likely to do? Keep price in a consolidation and wait for it to trade up into the bearish order block on the daily chart. Then once it breaks down, you get your imbalance here. Boom, you have it there. That's a reaction with FOMC. This imbalance here, totally different because you're in sync with the move. It's trading back up into this area here, and it's part of the break lower here. It breaks lower, comes back, rebalances, and then you can expect it to trade lower. So there's a stark contrast between this and this, or this and that. And that's what you want to do. You want to go back and look at where you would have maybe expected something like a sell or a buy to form with a bias, and then really go in here and remind yourself with your own annotations and say, okay, the reason why this wouldn't be a good sell is because the next day is FOMC, and the market's likely to keep it in consolidation before FOMC, and then FOMC is the day of event. Okay, that's when the market moves. All right, so that's enough jawbone. Let's go into the 15-minute time frame. All right, here's the 15-minute time frame for the dollar index. You can see that really nice sell side imbalance, buy side inefficiency, optimal trade entry here, and then sells off into that beautifully. Again, real nice optimal trade entry. Spent a lot of time in here all throughout New York, then broke, then comes back in for the setup for FOMC. All right, let's move over to euro dollar. All right, here is the euro dollar daily chart, and I'm going to go through this a little bit more quickly. Yeah, I've done a lot of talking so far on this one, so try to keep it close to an hour at most. Sell side imbalance, buy side inefficiency. I mentioned that we were likely to drop into that, take out the buy side liquidity here. We have done that, and we traded down into the down close candle prior to this run up. So this level here is our discount array, and the premium array is consequent encroachment and the premium high of the daily sell side imbalance, buy side inefficiency. Okay, so there's three levels we're going to see when we drop down to the hourly chart. The lower one is the bullish order block high. The middle line is going to be the discount low of the daily sell side imbalance, buy side inefficiency, and the upper level line is the premium high of the daily sell side imbalance, buy side inefficiency. Okay, so let's drop down to the hourly chart. All right, here's the hourly euro. You can see how we traded into that order block 1, 2, 3, 4 times imbalance, runs with the FOMC, and it takes out the buy side liquidity here, and consequent encroachment has been reached for the daily. So we'll see if it wants to trade up and complete this. Now, before I forget to say it, because I didn't mention it when we were on dollar index, tomorrow is Thursday, so we know that the likelihood of Wednesday's momentum going into Thursday can classically form the weekly high in New York session on Thursday for euro, and the weekly low on New York on Thursday for dollar. Now, I'm not saying that's the case, but if it were to trade to that level here, and it's during 7 o'clock to 10 o'clock in the morning tomorrow, New York time, then I would be done for the weekend. I wouldn't even worry about trading Fridays. So I'm answering a question there. When do I not want to trade Fridays? When those types of scenarios happen. So if I have a level I'm looking for and it reaches it by Thursday, New York Open, I don't care what everybody else is doing. I'm personally done. And it could still move 100 pips beyond what I thought it was going to do on Friday. I just learned that most of the time it doesn't do that. And many times it goes the opposite direction after Thursday's New York session if it hits our levels or my specific levels. All right, so we have that imbalance in here. It trades down to the order block there and then rallies. This is the discount low of the daily sell side imbalance buy side inefficiency. This is the premium high of the daily sell side imbalance buy side inefficiency, and this is the order block level. Okay, or bullish order block. Let's drop into the 15-minute time frame. All right, here's the 15-minute time frame. You can see really nice buy side liquidity pull here, and then the imbalance begins here and ends there on the daily. Nice imbalance there. Low to high, optimal trade entry with the order block on the daily, with the underlying context that euro's higher, dollars lower, into this imbalance level here. So now think, if it's dropping down to give you a buy here, it already reacted there on the sell side imbalance buy side inefficiency discount low. That's that lower level, and this is the upper level that closes in that daily imbalance. When it drops down here, think, did it really run that deep into the imbalance between here and here, these two levels? No, it was very shallow. So when it's coming down here, it's more likely to have a much more pronounced run and go above here. And it was also a shallow run above these relative equal highs right there. So it dropped down in, stopped everybody out that was wanting to be long when it's running higher. Drops down, optimal trade entry, then sends it higher. Small little imbalance there. Left a small little piece open. We want to see this left open. We don't want to see that trade down, fill in ahead of New York. That's not what you want to see. Can it go down there and fill it and then rally? Yes, but I don't personally like those types of trades. So what I just taught you there was when it could still be in a bullish market and still trade down into an imbalance, what imbalance won't I take? That one, because it's trading into this ahead of Thursday, and it might fail to make a higher run into Thursday. I'd like to see it stay open here, and I would have already been in a trade or not take new entries. So there's a lot there. It doesn't feel like it if you're new, but I said a lot. Let's go with the cable. All right, here's the British pound versus US dollar daily chart, and I'll go through this quickly. Low, high, lower low, breaker, extending out in time. We accumulated in there on the mean threshold, which is the middle point of this up close candle, extending out in time, mean threshold, and higher. Okay. I counseled you to look at this area here. All of this is buy side liquidity, and this is likely where we're going to trade up into if we can take this high out. So that's what I'm thinking might transpire. Obviously, it could do it over the course of next week, not necessarily Thursday and or Friday of this week, but I'm looking for that idea to pan out. I'm not terribly bullish because cable's been very fickle lately, but gun to my head, I'm telling you, this is where I'm focusing still, and I'm going to work with that narrative going forward. So let's drop down to the hourly chart. Just be mindful that these levels here, okay, you won't see these when we drop in the lower time frame, but this level here is going to be the high of the breaker. Okay, it's a bullish breaker. All right, you can see price consolidating way too long, in my opinion. I don't like it like this. The market's really fickle. It's not trying to do too much. It's not one-sided. We did have a nice clear buy side liquidity pull here. We traded up into that, only on a shallow basis. Now this is one imbalance that I wouldn't mind see it trade down into, and it's going to sound like a contradiction. Why this one and not that of Eurodollar? Well, Eurodollar traded down the majority of its imbalance and left a small little piece there. Cable has not done that. If it does that, it can completely come down to the order block, and I'll accept that. That's fine. Or it could do what Euro did, went down and leave a small piece open, or just don't even go into it at all and rally from where we're at, or institutional order flow entry drill here. Well, what's so many things? What are you going to do? Which one makes sense to you? And when is it occurring? Because if it's occurring in London or if it's occurring in New York Open, that's when it matters, not if it gets into this range. You have to combine time first, time and price. This is an area where we're interested in, but it has to do so, trade into it during New York or London. If London and or New York doesn't trade into it, then there's nothing to talk about, is it? But I wouldn't mind taking a trade in this and look for it to go higher, because this has been left open and more exposed for the buy side imbalance, sell side inefficiency. So it's gone too quickly on the upside, not any opportunity for selling. So the algorithm could go down in there and give smart money opportunity to assume a long position, and then they can reprice higher. I like getting above here. I think that's reasonable, and then trading into the low of that imbalance. And again, I said that the high, we probably wouldn't see that unless I scrunch it up here, as I did. All right, here's the 15-minute time frame British pound. You can see real nice little fair value gap. We traded down to that, and it's also a optimal trade entry. And you don't believe me, so let's put a fib on. Oh Michael, I believe you. Don't believe me. Don't take my word for it. Look for it yourself. All right, so 62%. Take the 50 off because we can see we went below 50 there, so it's in a discount. And we'll put the 79 on just for completeness sake. And here we are, 62 to 79% tracement, optimal trade entry there, and it accumulates inside of that fair value gap there, and inside of the breaker. So notice that low, high, low. Look at the low here. Low here is 138.61 and 4. Low here is 38.62 and 6. Not by much, but still lower. Up close candle. This is your breaker. And folks, in month 4 content that's going from 3 to 4, you start learning about these in that core content. So we have the bullish breaker, trading into that, and the imbalance with optimal trade entry. That in itself is a complete model. You won't need any more moving parts except for obviously knowing the underlying bias. Is it likely to go higher or is it likely to go lower? If it's likely to go higher and you get these things agreeing, you won't look at this and say, what if it goes down here and take those relative equal lows out? Like everybody on YouTube. You're working in the right side of the marketplace. You're not offside. So you'll be able to blend into proper PD arrays. Because anyone can take my content after they've learned the buzzwords and go into a chart after it's happened. Okay, that's what everybody's doing right now, and it's fooling a lot of people. They're doing their own little mentorships, and that's why I'm barking at everybody on YouTube saying, trade it, do executions, and none of them are doing it. You're learning how to operate and engage. So that way, eventually, if you decide to do a signal service, not a mentorship, a signal service, and there's tons of money in that. Like if you want to get scratch up and you don't want to do like FTMO and trade other people's money, you want your own money to be traded, but you don't have a way to have a lot of money to trade with a respectable amount of money, you can do a signal service and show people what price is going to do in a demo, so that way you're in compliance. Let them understand that what you're showing them is in a demo, and let them decide. If they don't want to sign up with you because you're only going to talk in a demo, perfect. You don't want that client anyway because they're trouble. A reasonable, common sense oriented person that could see that if someone says what's going to happen in price, whether it's a demo or a live account, if someone says that the weather's going to be sunny for the next 3 days, but the weatherman says it's going to rain, and then it doesn't rain a drop, who's going to have the most clout? The people that's calling the weather or the people that's calling a weatherman? Titles mean nothing. All these people out here that are frauding people, okay, they'll have their day in reckoning. You, if you're going to be doing things on the up and up, which is what you should be doing, You're going to build a brand. You want to have a signal service. You want to be doing well. People will throw money at you if you let me teach you how to do this right. I'm telling you, there is a lot of people on this spinning rock, okay, that we call Earth. And they're lazy people, extremely lazy people. Or they have deficiencies that will never allow them to trade. So you can bridge that for them by learning how to do this the right way. And don't paint the charts up for them, because you'll be teaching by default, which is a break of our agreement and violation. 2, you'll be teaching them not to need you. So if your service is something that's based on reoccurring payments and monthly subscription to signal service, you want them to be a part of the membership of paying each month. You want a reoccurring service, and that's a perfect business model, to have residual income that's always coming in as long as you're doing what you're supposed to be doing. If they stop paying, obviously they won't have the link to you calling out the moves. So a move like this, okay, what you would say is the low here, what's that low? 138.92. We'll call it, okay, 138.92. So you would be an example, so that way you're in compliance. And I talk a little bit about this also in the mentorship, where I cover more how you can be in compliance with me and not violate our agreement and get kicked out of the mentorship, but still run a viable business. Well, if you're going to give signals, I again recommend do it in a demo, because it protects you and it protects your clients. That way, if they ever get a case of the rear end and try to say, well, I lost this money because you said this or that, well, that's not going to happen, because if you make them sign an agreement saying that it's a demo account, you can't make or lose any money, just like you signed when you joined here. None of you can say, if you lose money, it was my fault. None of you can do that. And you want to make sure you protect yourself if you do a signal service the same way. Absolutely the same way you want to protect yourself. And folks that know anything about the marketplace, they don't care if it's a demo. If you're telling them it's going to go to this level from that level, and you're doing it consistently, they don't care if it's demo. They don't care if you're making money, because if you're calling it right and they're doing what they're doing with their own money, fill in the blank. Think about it. If someone had told you what the winning lottery numbers are going to be for the next 6 weeks in a row, and you've been shown for the previous 6 weeks that you've been able to do so, what do you think the outcome is going to be when you say, pay me this much money and I'll tell you what the next 6 weeks are going to be? They're all going to be sending you money. That's just the way it is. Okay. And there's no shame in folks submitting to that if they know they can't do it. And there's a lot of people in this world that just can't be traders. And you don't want to teach this to people, because honestly, it's too good. And all these people out here that are running around, that are trying to reteach my stuff, that's a testimony that they can't trade themselves. They cannot do it. And that's why I rag them. But if you're running a signal service, you know what you're doing. And in that money that you get from that, that's the income stream that you'll have as long as you want to do it. But how could you do this trade here and be in compliance and not be teaching anything either, making yourself redundant after a time, after doing it so often? Someone's going to figure out what you're doing. I mean, I'm not that sharp, but I know if I was seeing the same thing over and over and over again outlined, I'd figure it out. This is your framework. What I just outlined here: the breaker, the fair value gap, buy side liquidity pool here that was only ran shallowly. The way you can do that is use this institutional order flow entry drill technique as your basis to do the trade. And you frame it with the low being at 38.92 and 2 pipettes. So you're going to do what? You're going to add 5 pips to that. By adding 5 pips to that low, you're up here. And your stop needs to be mean threshold here of this order block. So your order is 5 pips above the low here for institutional order flow. It's going to drop down, trigger any limit order they would have in that regard. Your stop is limited to here, and you let it run. How much? Well, you do all your Fibonacci extensions and expansion levels, and you know it's likely to reach for the mid figure. You know it's likely to trade to 60 maybe even 70. And what's the next institutional level? 80. So you give them levels in graduated form where they can take partials along the way. They will not know what you're doing. And when they watch it pan out and they see it after the fact, like when I show all my trade examples and executions and where I got out and what candles I got in, people lose their mind with that, because like, man, look at the entries and look where he's taking profits at. It's at the highs and at the lows. Right. And you know how to do this when you're going through mentorship. And I'm telling you, if you conduct yourself in a manner that is upstanding and you're honest, you're not trying to be more than you really are, you don't lie, you don't fake results to get people to send you money, learn how to do this the right way. And you market yourself for free. Let them have it for a month and a half, maybe 2 months. They will warm up to you. And then when you say, now, you've seen me do this. I don't need to show you a MyFX book. I don't need to show you my record of this and that. I showed you beforehand. That's the test. That's the litmus test that nobody wants to go through. If all these guys out here that ran signal services were so good, they would do 2 months on YouTube for free and put it out there. Just let it all out there. But they know that isn't what they want to do, because then they're on the hook, because they're using 2 different accounts and half their clientele is looking at one and half their clientele is looking at another. And as long as they have a winning side somewhere, they got money coming in, and they're always going to promote the winning side. So that way, when the new suckers come in, they're saying, wow, look at the track record here. He's got winning trades over here. And then, yeah, the people that are staying with the service, they'll say, yeah, he made this money with us. He called these moves. But the other half of the clientele, they didn't get those trades. They got something else. You don't want to run a scam. Don't do those types of things. Do it up front. Be honest with everyone. Let them see what they're getting involved in. And then, once they get behind the wheel with you, and if you're consistently able to find these setups, number one, the mystery of not knowing what it is that you're doing is going to keep them hooked. They're going to talk about you to everybody they know, and that's going to bring more people to you. And it's just like me. I never advertised. Everybody knows about me because of word of mouth. That's it. I've never ran an ad. I've never seen, you never seen rather, an Inner Circle Trader ad on YouTube. I've never put an ad on Facebook. I've never put an ad anywhere in the 2000s. Since year 2000, I've never advertised anything. And I've made a huge impression in the industry because of word of mouth. And let that be the testimony, because if you are able to do what I'm teaching you, people will talk about you. They will, man, you will become legend. And everybody will want to subscribe to you. And here's the beautiful thing. There's a lot of you in here that may think that this is what you're going to do. And you're thinking, well, what if everybody else is doing the same thing? I'm not going to have any people to... Man, you have no idea what you're talking about. There's so many people out here. Like, there's so many people. And it's all how you market yourself and how you present yourself to everyone. Being honest. Setting yourself up so that way you're bringing the right clientele. You do not want these 20-year-old, nutcases that jump around from things left and right. You don't want to do that. You don't want to show cars and materialistic things. You just come out there like Mike Tyson, like I did. I don't show any flashy stuff, no materialistic stuff. I just go right to a chart and I destroy it. And then leave everybody to figure it out, how I was able to do this or that, and they argue about this or that. But you all came here because you saw that kind of stuff. And now you see behind the curtain what it is I do. You don't want to do that with your signal service clientele. You never, ever, ever show them the sleight of hand. Let them fall addicted to the product, which is you selling the idea of this is what's likely to happen. If you're honest and you're able to do so consistently, they'll never complain. There'll be people asking, can you teach me? And you just politely say, that's not part of the agreement. And be consistent in that. Never flirt around with, I might teach it. Don't do that. And folks, I'm telling you, there are so many people out there that will gladly pay you monthly to find setups like this. And if you're able to do it where you're framing one setup a week that you look for like that, but you're able to find more setups, That way you're going to end up over delivering. Like when you all came into this mentorship, you didn't expect to see daily uploads and PDF files and videos like I was doing for a while. You want to over deliver because that gives the client a sense of, wow, man, I'm really getting way more than I paid for. And that also builds in satisfaction. And it also is a word of mouth buzz. They're going to talk about you. And what are they going to say? Nothing bad, because if your trades are good, they're going to be glowing remarks about that. And they're going to say, I signed up for a signal service with one good setup a week, and I'm getting like 2 or 3 a week. What? Yeah. And all of a sudden, they have, committed completely to you that they're going to pay you every single month. And you don't need to do multi-level marketing crap, okay? You don't have to scam anybody. You don't have to rent any supercars that you don't really own. You don't have to do any of those things. Let the decision be made on your aptitude and ability. And if you know what you're doing, it'll be easy for you to do that. You'll just step out there and show yourself to the world and say, this is what I'm going to be able to do for you. And as a testimony to my commitment to this, and also for a frame of transparency, I'm going to call the market for 6 to 8 weeks. And I'm going to tell you what I'm going to do. And do it exactly like they would be paying to receive from you. Deliver it the same way. Now, you can show them a chart like that and say, you're interested in being a buyer at, well, this isn't going to work, is it? Let's do it like this. You're interested in being a buyer at 97.5, we'll call it. Well, 97.4, just that's easier to. Okay. And when the market's up here, you draw a line there, and this is where you want to be a buyer, and you put your stop loss at that level, but you don't draw any reference to that candle. Don't do that. Everything's out here in the open space. They might look over here, but they're going to look at, oh, he's looking to buy this old high. Maybe. Sometimes it'll be like that. Sometimes it ain't. But you want them to see the level you're trying to buy, the stop where it's at, and draw in your levels where you're going to take partials at. And if you do that for 6 to 8 weeks consistently, you will have you'll have more people, honestly, than you have expected to come in or will have ever expected to come in. Like, I never expected this many people to come into this mentorship because I didn't advertise. I didn't want it to be this big. And that's another reason why I'm stopping, because it's too much to manage. I've made enough money. I don't need it. When you have signal service like this, it'll create a constant revolving door of new clientele coming in. But if you're doing it right, they won't be going out like a indoor and out the door. I'm not staying with this person. They're going to be coming in and they're going to be like, hey, I've got 3 other friends. And what you can do then is say, look, I'll give you an incentive to recommend me to other people. If you can get someone else to sign up, I'll give you 25% off your next monthly payment. If they've never wanted to talk about you, now they have a reason to want to talk about you. And it only gets a discount when they bring someone in and they confirm and you were the referral that took them in, and boom, you got it. And you just got a constant growing base of clientele, and you're doing it with a demo account. You're in compliance. You're not promising anybody riches. You're promising them that this is what's likely to occur in price action. Price action is not trading. It's not the same thing. It's not the same thing at all. You cannot make money. You cannot lose money. But the spectators that watch you do that for 6 to 8 weeks, they read between the lines. They know without you saying anything, and I'm trying to be as compliant as I can, and you know what I'm saying. I'm not going to say it in words, but they know what they're going to do with this information. And you're not encouraging them to do it. You're just saying, this is what I think the market's going to do. And it's likely to do this, this, this. And if it doesn't, the stop out is there for a reason. And that would be your hypothetical loss. Or this would be your hypothetical gain. And you remind them every single time that it's in a demo setting. And past performance is not indicative of future results. And you have no idea. It's just crazy. It's crazy. And you don't want to make a big monthly fee either. Something reasonable. What's reasonable? I don't know, 50 to 75 bucks a month. You're not trying to drain them, because most people don't have a lot of money because they don't have a lot of money. And you want to keep it at a level where you don't hurry up and graduate it real high and go into too high of a payment. You want a lot of people paying you a reasonable amount of money, because if people do quit, you won't see that impact in your revenue coming in. And that income stream will make it easier for you to trade profitably in your own trading, because you won't be in a hurry to rush to make money in the markets. It sounds like an oxymoron. Oh, if you're so good to make money as a trader, you don't need to run these other businesses. No. When you start trading with size, and what is size? You start putting on $1 million or more in leverage. It's a different kind of psychological impact when you take those trades. And you don't know what it feels like when you're doing trades with $500 per pip. Like that's a sick feeling. As soon as you put that trade on, and as soon as you put it on, you're down $1,500. You got to cover that spread. That's a weird feeling the first time. And if it pulls against you a little bit, and you start seeing $2,200, $2,300, yeah, you're probably not prepared for that. Okay, and truth is, you're not. But if you're able to make money outside of trading, and a respectable amount of money, mind you, it'll make profitable trading in your live funds so much easier, because you're not going to be in a rush to take a trade. Like right now, you're probably wanting to take a trade more than you should, quicker than you should. And you're growing impatient between your trades, especially if there's a winning trade. You like it so much you want to do it again right now, real quick. But by having an income stream that is, again, respectable, lots of income can come from this. If you have that, it will help you be much more disciplined in taking on monetary risk with your live trades. And here's the thing: never, ever, ever give out a signal with a trade that you're in or plan to take, because you're emotionally and psychologically committed to that trade. Never do that. If you're going to give a signal, you give it to a market that you're not actively in, because you're objective about it. It doesn't give you any money, and it won't take any money from you if you're right or wrong. Versus if you put a trade on, or you're about to put a trade on, and you're going to take that same signal you're giving everybody else, man, you have put an Olympic size feat in front of you. Not only do you have to beat the market for your own sake, but now you have the added stress and concern of, wow, I hope I'm right in front of them too. And they may not know that you took the trade. In their mind, they probably think you are. But the point is this: you have doubled the risk. Think about it. You have. Every time you give out a signal, you're taking on risk. Because if that trade doesn't pan out, they'll probably give you one or two more. But if they fail, they're out the door. They're not staying. And that's why you want to keep your trade frequency low. It creates the opportunity for you to fix if there's any issue. You can rebuild any drawdown because it's so infrequent of a trade. But they won't mind it because you're not in there trying to throw dice every single day. So these are all things that you want to do to help manage yourself psychologically and not make it harder for yourself while doing it. So that way both income streams are segregated from one another. They're not dependent of the same result. And the one that comes in, whether you take a trade or not, that one's a steady eddy amount of money coming in. And it's in a market that you're not actively in. You have no affinity for the result being, in a monetary sense, in your own account. And if you don't believe me, just imagine the stress level of not only putting your trade on, but then if that trade goes into drawdown, you also start thinking, I have 1,200 people paying me $75 a month, and I'm losing. And you're going to magnify that so much bigger than you would have if you would have never given the trade that you're trading with live funds with. If you think about it for a moment, you'll see what I'm saying. But folks, you have no idea what you're learning and how it can totally change your whole financial landscape really quick. Like real quick. Like don't think that you have to master all of this right away. You just need to find that one little niche in here that is yours. And then you can monetize that with a signal service, or you can go into these FTMO type things and get funded with an account to trade with, okay, and use other people's money and take a split from that to build up your own amount of money. And then once you're done with that, if you don't want to do other people's money anymore, you just go start trading your own. You don't need to be in a rush. You do this the right way the first time and everything becomes easier. But all of you are in a hurry, and it's mostly the younger folks. Like, I got to learn how to do it before I'm 23. I got to be able to do all this stuff. I want to be a millionaire by the time I'm 25. Slow down, because if you rush, you're not going to be doing it the right way. And you're going to take additional risks. You're going to gamble, and it's going to suck when it doesn't pan out for you, because it takes so much more to build back when you're first starting out. But hopefully this has inspired some of you. Hopefully it's got some of your gears turning. Maybe it's inspired you to consider it as something that you'd maybe not have considered prior to. You know, I mean, everybody needs to make an income somehow. Everybody has to pay for their food. Everybody has to pay for their, utilities and where they live. Even homes that I own, I still have to pay property tax on that. So I'm paying rent. Paying rent to the government. If I don't pay my rent, they'll come and take my property from me for what I owe. And then if I don't pay it in a year, they sell it to somebody else for whatever that tax lien would be. So you're always paying somebody. So you need income. And you don't want your income to be dependent on the marketplace. I've always had businesses outside of trading. And there's a way to take what I'm teaching you and monetize it, make it your own, be compliant with me. Nobody's upset here. You're making money. I'm proud of you. You're changing your financial landscape, and you are absolutely within your own right to never even trade live funds. If you were making $75 per head with 1,200 people or 500 people a month, that's a really nice living. You don't need to trade live funds. Maybe some of you will be better by not trading with live funds because you're more objective and you're not attached to it financially. And that measures the amount of risk out in a way where you can think clearly and share your opinion and not feel pressured to do so. It's just something to get you thinking. And like I said, it's not meant for you to be convinced in doing it, because if your heart's not in it, obviously don't do it. But there's other ways for you to get going in this, and you don't need to take years and years and years of working extra jobs to save up to get money like I had to do. Like when I had to refund my accounts when I blew them out when I was a 20-year-old. All those things took time, and it was stressful, and it was like I couldn't stand it. And folks, you have no idea how amazing things could turn around. And it inspires you, and it refuels you and energizes you to keep doing more and studying and practicing. And it just makes you a well-rounded trader. And if you operate with honesty and you are 100% transparent with everyone in the beginning, there will be no arguments with the people that come in as your client. And you'll have a lifetime client if you're sincere, if you're honest, and you are not trying to be better than the next guy on social media, better than ICT, better than this. Just be steady, because there's so many people out there that are risk averse. They don't want to put any money at risk. But if they see that you are able to do this, man, it's nuts. And you could literally market it as 6% per month. That's doubling your money every year. And you can do the whole marketing thing. Stop trying to get rich quick. Look at what happens if you take this much money, or if you take this figure. We don't even put a dollar sign on it. You take this figure and you double this figure every single year. What would this mean for you in your own life? Notice I did not say you're going to make money. You're going to be rich. This is what you're going to get. I'm going to pay you this much money through my trades. You don't say any of those things. That's misleading. It's enticement. That's what's going to get you in trouble. But if you say, what if you learned a skill that could inspire you to make better decisions in your life? Notice the difference there? I've not drawn any parallel to trading, making profits, or promising profits. None of that took place there. It's not lying, it's compliance, but it's not misleading either. You're promising them that you're teaching nothing, but you're talking about your opinion about what these charts are going to do in the future. And they're encouraged to measure your accuracy in doing so. That's it. Everybody out there that knows what these markets do will know right away what you're saying without having said it. And then when you put the PayPal or payment instructions on you receiving money, they'll start sending you money. It just happens like that. But you have to be able to deliver, obviously. If you don't have a skill set behind it, they're in their right to get their money back. And you might not like that, but it's easier to give a refund than it is to do chargebacks, because if you can't win the chargeback, they get $25 assessed to each chargeback. So you could quickly find yourself in a lot of trouble financially and bankrupt, because you would be owing more money than you actually made if it gets really bad. And now that's a worst case scenario, but I have to tell you, the other side of the coin. So you don't want to rush into the decision of doing that, because if you don't know what you're doing, you can get a lot of trouble real quick financially and have to be shut down and file bankruptcy. And nobody likes to do that. I did that in the 90s. It sucked. But there's ways to build your credit up real quick too. But that's another discussion on another day. I've talked way too much, and this video is I'm not going to edit anything out except for the typical things. Usually I try to streamline it and make it a little bit smaller, but I talked a lot of things in this video that I would have liked to learn when I was 20 something and starting out. So hopefully I've done that here and inspired you, and hopefully I didn't bore those individuals that haven't been interested in doing something like that. But this is all part of what you're learning here. Different ways, different avenues to use this information, still be compliant with me, and also find an extra income stream. And why it's beneficial to have that, because if you're not forced to look at trading as your only way of eating and feeding your family, that's stressful. For instance, I did next to no trading in 2020. Just a couple things in the beginning of the year, but I got concerned that I was going to be wrong, and I just simply didn't trade. Now, I didn't need to trade. I've been wealthy for a while, but had I not been wealthy and I was only a trader that started last year, and I didn't have money coming in any of my businesses anywhere, that would have been very stressful for me. But I don't have one source of income coming in. I have multiple streams of income coming in, and they're all separated from one another. They are not linked to anything. So if one goes down, they all go down. None of that occurs. You will have multiple income streams that you are not relying solely on or is impacted by any one or all. That is wealth building. That's what you want to be doing here. And trading is one of them, but that's one that is speculative and it's not guaranteed, especially as a developing student. So if you're looking at the markets as it's going to be easy for me, I'm going to make money, you're going to be fooled up to the point where you start putting live funds in, and then you're going to realize, oh yeah, this is going to require skill I didn't really have yet. And that's problematic for most of you because you're trying to get there too fast. But if you do the things I'm telling you to do, learn the skill set, know what you're doing, there are so many ways for you to completely remove yourself from your job. And then when you're not working and you can apply more time to studying and refining your model and your skill set, man, like there's no words for me. Like I'm trying really hard to articulate what it was like for me, and I just can't do it because the words don't reach far enough to satisfy what I feel and what I felt at the time, the liberation that it gave me, the feeling of empowerment, the feeling of encouragement. I just felt just really amazing. Like it just felt really good, and I can't convey it enough for those individuals that have that desire. Man, if you have it, work really hard here to learn this and do everything honestly. Be as open and as transparent as you can. And if you do that, you will have no problem absolutely no problem whatsoever garnering a crowd. And then once you get an income base coming in, if you want to expand, do some marketing and then use your results you've shown publicly, through a YouTube channel that was posted before the fact. And when they see that, there it is. They don't need to see it again because you've already done it. And word of mouth will go through. And if you are opening up your comments, not like me, because I get a lot of people, they want to talk about me because they want to tear me down to make themselves look good. They want to say my stuff doesn't work, but they're teaching my stuff in a new name. They're not doing that with your signals. Now, it doesn't mean that someone's not going to buy into your program and parrot your setups or your signals. That's just the way it is. You're going to have to accept that. But if you're building a clientele that's ever expanding, that's why you want to market, because eventually people are going to take your stuff and then sell it in their own little circles, and they'll try to maximize it as much as they can there too. So you want to be proactive about building up yours. And then if you hit a threshold where you can make 7 figures, and if that's what you need to sustain yourself for the rest of your life, $5 to $7.5 million, I believe personally that a single person can do very well the rest of their life in their mid-20s if they have $5 to $7.5 million. Right now, that might be different 10 years from now, if you're revisiting this video. But the point is, you need to sit it down and put it to pen to pad and have outlined everything that you're trying to work for, what sets you up where you don't need to work for money anymore, and money in itself does all the heavy lifting for you. And that first 5 million is the hardest ever to make. But once you get there, it's easy. It's real easy after that. And it sounds stupid to say it like that, because if you don't have it, it's like, oh yeah, everybody can say it's easy there. But it's true. Because if you have the skill set that got you to that 5 million, you have the same skill set that takes you to 50 million or higher. You just have to apply yourself, maximize the efforts that you're putting out, but don't put more work into it, your part. You want to let all of the other businesses and things build up your net worth and your revenue streams without creating cross currents that cause or affect the results of any one or all of the other income streams. And again, the main thing and why I'm talking like this and why it's even salient to you is you want your trading to be objective and not forced, not put on because you have to have money. You want it to be a way for you to have income that you trust is likely to be there. But if it doesn't happen, you take a loss, it doesn't change anything. You'll still be able to eat. You'll still be able to pay your utility bill. You'll still be able to make your car insurance payments. You'll still be able to pay your cell phone bill or feed your kids or let them go do whatever they want to do. Let your spouse do what they want to do. And your standard of living doesn't change because you took a loss or a series of losses, and it doesn't unravel you mentally. That's a big thing. And if you're going into this with this idea that you're going to hit the ground running and you're never going to have that period of drawdown, you're never going to have that period of despair and depression because maybe you don't listen and you start off and you sputter and fail initially, go back to this video and listen to what I'm talking about, because this is a plan that I had in my mind early on, that if I didn't do as well as I needed to get out of work, this is what I was going to do. Now, I didn't have YouTube back then. I mean, YouTube didn't exist. I was doing America Online. And that's what I did. I did a newsletter, and I charged $75 a month. And I didn't do a whole lot of trades. I didn't have a whole lot of setups. But it helped me fix when I blew out my accounts as a 20-year-old. It completely erased that, and I had a plan. And I said, okay, I've already blown 2 accounts. I've ran them up, and then I blow them out. I ran them up and blow them out. So I'm probably going to run out 2 more accounts before I figure out what I'm doing. So I need to know if I can fund 5 accounts. That way, if I earn enough money through the service I'm going to run, that money will be a reserve, and I won't have to go out and get these additional jobs to build the account back up. That was my mindset. So I'll talk a little bit about, not like what I'm talking about here, obviously, because this is detail, but when I do the series on YouTube, if I was 20 years old and starting out, I'm going to talk a little bit about what I've said here, but I've given you way more here than I'm going to discuss on that YouTube channel. I'm just going to talk, in vague terms and ideas. But here, I gave you how a real market setup with the fair value gap, bullish order block in the form of a breaker here, and optimal trade entry, running out buy side liquidity, and in framing that with a signal service where they don't even see the logic as to why you're doing what you're doing. That's key. Number one, it appeases me and it doesn't remove you from the mentorship for violating. And you'll have brand integrity kept, with you not really teaching what it is you're doing. Because why would they pay you for signals if they can learn what it is you're doing? Think about it. Why would they pay you? Why would anybody pay anyone if they learned how to get that signal on their own? Which is why I'm here telling you, when you're in the mentorship, I'm not giving you signals. I'm teaching you how to be a signal generator, because your income potential is unlimited. Hypothetically, it's unlimited. You can grow it to be whatever you want it to be. And it's not limited just finding setups in Forex. Because if you only promise them a good solid setup per week once, look what that does for other market asset classes. If you like crypto, you can do something on crypto. If you like stocks or have an affinity for trading stocks, you can do setups with stocks. So you're not doing just one area of asset class. Like, oh, hey, look over here, Forex traders. If a stock trader looks at Forex, they're like, I'm not interested. Or a Forex trader sees an ad from you saying, I'm teaching how to do setups in stocks. They're not interested. They're not biting that. But if you do the low-hanging fruit approach to giving them one good setup per week, you can do something in commodities, you can do something in crypto, you can do something in stocks, and you can do something in Forex. And every single one of them is an individual, unique income stream that's a part and outside of your individual trading results. Think about that, folks. I mean, think about it. You could turn this into a complete enterprise, all from one specific model. And I was younger, man, and I'm going to say this and I'll close. I used to pick up acorns when I was with my friends all the time. I'd pick it up and I'd say, here, hold your hand out. And I'd lay the acorn in their hand. And I'd say, what do you see? It's an acorn. What else do you see? Squirrel food. And I said, no, seriously, what do you see? He goes, I see an acorn. Now think beyond that. What's that acorn going to grow into? A tree? Okay, yeah, I see a tree. So more acorns. Is that what you see? That's good. But when I see that acorn, I see a forest. And every one of those trees in that forest is making more acorns. Once that tree's planted and it starts producing acorns, your work is done. Then it just drives itself. It just feeds itself and grows and grows and grows. That's what you want to treat money like. $1 to me is important, because that $1 applied in a multiplication, I can turn that $1 into anything I want it to be. And you can do the same thing with what you're learning here. The skills that you're learning here, you can literally frame this into a business that literally brings in income streams from multiple avenues, all trade related, but not your trades or your trading account. So you're hedging your trading profits and losses from income. You don't have to keep your good paying job right now that most of you want to leave and would love to just do trading. You don't have to do that. You can keep that, do your trading, and have these other income streams too, until you get to the point where it's just really stupid for you to have your job, because you won't have the time to do the things that make much more money doing your businesses. And every single individual business is its own individual enterprise, its own LLC. And if you're in the States, S Corp all the way, not C Corp. Try to get S Corp and maximize as much as you can. Start an IRA that's self-directed. So that means you can do all the trading yourself. You make the decisions where you're buying and what you're trading. And you maximize how much money. If you're married, you'd take your spouse, you pay them as an employee. So that way you're paying them. They are a deduction on the business income. You pay your spouse as an employee, and you talk to your accountant and find out what the maximum amount of money that you would have to pay for them to do the maximum contribution to your IRA. And you can put $118,000, $120,000 per year of your income, put that right into an IRA that you are writing off as non-taxable because you're putting it into an retirement account. And then you're taking that money that you're not having to pay immediately to the government, and you're putting it in an income generating device, which is your trading account, and you're making income with tax deferred applied to it. Like, you're not paying immediate income taxes on that. So you're going to be able to compound that. Now you can take that same $100,000+ of income that you and your spouse can write off of the income that you're making from the businesses and put it into this self-directed IRA. So you're putting in over $100,000+ a year into an account, into a trading account that's not taxed. You're paying less money in taxes because that deduction comes off of the revenue that you otherwise pay taxes on, and you're putting it into an account where you can make more money with it, hypothetically, of course. But imagine if you did this for 10 years. Right away, you have $1 million in that account plus whatever you earn in revenue, plus whatever you earned in the trading. So you're constantly feeding yourself, ME Incorporated, me Incorporated, or like YOU Incorporated. You are being fed multiple streams of income, and they're all diversified, they're all spread apart, and you're able to employ your kids. Like, you have children, you can pay them a salary. You set up what's called a family management company, and it's another corporation. It's all a piece of paper, really, but you pay money to your family management company to pay your children, and you can pay them up to a certain amount of money, and I'm not going to tell you what that is because that's not my area of expertise, but I can pay my kids to do paper shredding, like when we do all of our worksheets and who managed to pay what and who we have to put back in if they didn't pick their payment, all that stuff. All those tasks I give to my children, and while they're not really old, I'm able to pay them more than what they would make at like a Chick-fil-A, like what most teenagers would work at, a fast food restaurant. I'm able to employ them, and it's tax deductible, and they don't even pay income taxes on their wages. Again, talk to your accountant. These are all things that are legal. They're all legal loopholes, but these are things that you help spread your money around. You're always going to pay taxes, and I pay a lot of taxes, a lot of them. I wish I didn't have to pay as much as I do, but you can't escape it. But you want to maximize everything you can legally, and by doing so, you are a much well-rounded, financially driven person, and you'll have enough income that you can be charitable, and those charitable donations are tax deductible too. And it feels really good when you give other people or other organizations that are really deserving of it. When you're able to do that, it just feels good to do that. I'm not trying to twist anybody's arm, but there's a lot of charities out there that I'm fans of, if you will, and I support the idea that they stand for. So to me, you give, it comes back to you one way or the other. And all these things and these avenues of income can be maximized. And you want to be able to make the best use of those things by talking to a tax strategist and a certified public accountant. But like I said, this is just meant to get your gears going, to get you thinking about what you can do with this information. It's not just, I got to be right or wrong about trading or I'm a failure. No, you need to learn how to do this well. And you can take this information and make lots of money. And then you can pass this skill set on to your children. I mean, think. The opportunities are endless. And you don't need to sell my videos. You don't need to repackage my course material. You can do the things I'm teaching you, listen to me, and still get rich Okay, you can do it. And nobody's going to be upset here. I won't be upset at you. I'll be extremely proud. You've listened to me. You've done what I told you to do and used the ideas and strategies. And then boom, you put your whole financial legacy in a different league. And everybody behind you will live differently as a result of that. And to me, that is awesome. So hopefully you got something out of this video. If not, I apologize for boring you. And I'll touch base with you again tomorrow in the Daily Log entry in the PDF. Take care.